Hello, everybody. Welcome to the technical analysis webinar this evening. My name's Troy. I'll be presenting today. I'm a senior account manager with AvaTrade. As we get going, let's first do a quick systems check. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know. A lot happening today. The markets have had some large and also predictable movements from a technical analysis standpoint. Let's see, someone's saying no screen. I think it's just that person. Okay. If anyone else has a screen problem, let me know. All right. So as I was saying, there are some nice movements going on, and all right, I had a few people say no screen, but now they're saying they do. Okay. So once again, if anyone's missing their screen, check your system, make sure you've turned everything on, expanded the proper window. The vast majority of people, I think, are up and running fine. All right, so as I was saying, the movements have been nice today, predictable from a technical analysis standpoint. We'll also take a look at the fundamentals to make sure that you understand what was driving the movements. And once you see the fundamentals, you might kick yourself that you weren't already in on some of these movements if you haven't done so already. As you pair the fundamentals with the technicals on the chart, and you're going to see just how predictable the movements were. And you can apply these concepts moving forward, obviously, through the rest of the day, the rest of the week, etc. So let's have a look. And as we go forward, always keep in mind all investments have risk. I think we all understand that. No one move is guaranteed to profit, and you've got to manage risk accordingly, according to your own account, with trade sizes that are appropriate and according to your risk management plan. Keep in mind that what we go over is meant to be educational in nature. It is not meant to be taken as financial advisement, but certainly the things we cover are very useful for adding more knowledge to your trading plan, adding more tools to your tool belt, so to speak, so that you have an idea of some useful locations to find information and some useful techniques on the charts that might help you out as you piece together or improve upon your trading plan. Okay, so now I'm getting some people saying they don't have sound. Let me start over with the systems check. If you're seeing my screen all right, should see a risk warning right now, and hearing me clearly, both of those, type OK. All right, great. I've got enough responses. I'll just type a message for those having issues. Okay. All right, so I just posted a message there that all are up and running fine, that there's just some local issues on some of the client sides. Okay, so you can read our full risk disclosure statement on avatrade.com. One thing to keep in mind as we're talking about risk, if you're using the AvaGo app, there's a great feature that's exclusive to AvaTrade only, and specifically you need to have the AvaGo app on your mobile device to use this feature. If you log into your account through the AvaGo app, you'll see that on most all the FX pairings and also on gold and silver, that the Ava Protect feature is available for covering risk over defined time periods for a flat cost. It's a really nice feature, and I think you could find it useful, especially during times where you expect large amounts of volatility. To be able to cover your risk for a flat cost can work out well with some trading strategies. John, welcome from the Netherlands. Nice to have you. Okay, so obviously keep that in mind, but obviously we're here because there's also the potential for nice profits. We all should understand that as well. Yeah, AvaProtect has a flat cost based on the trade size and the time period, the length of time that you pick the coverage. Uh, yeah, Ebert, your audio problems were on your side. Everyone was typing that the audio was okay. So just a couple individuals with some issues on their side. Yeah, we'll take a look at the NASDAQ Tobago for sure. Okay, so let's move on. Let's take a look at a couple things. Keep in mind as we go forward that technical analysis, there's a couple different ways to do it. And I tend to use manual methods of technical analysis. Uh, what I mean by manual technical analysis, and we'll do that on the charts here in a moment, is I mean drawing our own lines, our support levels, our resistance levels, our trend lines, really learning to read the charts like a musician reads music notes. And the charts start to be competitive with certain rhythms to them, and you start to recognize maybe predictable entry points and spots where it's more likely than not maybe to go one way rather than the other, especially if you already understand what's driving the tempo. Meaning, if you've looked at the fundamental news, you can predict a little bit better many times what direction the rhythm on the market might change to. Okay, and so as you start practicing reading the charts and doing technical analysis, you should start to see that it really does look predictable on the chart. And you start to see these price levels and predictable movements and changes in rhythm as well. And so the other idea is a lot of folks like to use indicators. Those indicators respond to the same thing we're just talking about now, the historical movements on the chart, and they're programmed to tell you when something is maybe overbought or oversold to give you a signal of when it might likely change direction. What those indicators are missing most of the time is the fundamental news. And in one direction, they might be working really well, and in the other direction, they're throwing false signals consistently. So indicators, I'm not saying don't use them, they can be great, but use them while also understanding in which direction you might prefer to trade based on the fundamentals. Okay, and so with that said, let's go ahead and take a look. And if anyone has any questions, again, please don't wait to the end to ask. You can interrupt me at any time to ask questions. I always like to do this, a quick snapshot. Some people think it has to be complicated to do a quick fundamental review of the market before they start their technical analysis. Real quick, looking at this right here, does this picture show you in about 10 seconds that there's positive momentum on the market or negative? This right here that I'm pointing at, all of this right here, does that show positive momentum or negative momentum on the market? What's the sentiment? Positive, for sure. You see that, and many of you are typing positive, positive. I don't see anyone typing negative. You can get an idea right away that maybe I prefer to sell on gold instead of buy. It's all green. The only thing red is the fear index. The only thing dropping in that picture, in that snapshot, is the VIX, the volatility / fear index, which means fear is dropping, volatility is dropping. Confidence in the market is rising today. You can see it, everything's green except the volatility index. So without looking, we can probably say, okay, gold has probably got bearish pressure on it. Maybe I prefer to find high points and trade down off the resistance rather than find low points to trade up off support, because maybe today it's more likely to break a support level than it is to break through a resistance level. You get that idea in a quick snapshot. Okay, some other things we can look at, and let's look at yesterday with China news. You always have to look at the day before, and Australian news. So what do we see here out of Australia? Late last night, early morning, depending on your time zone. Was this good news or bad news for Australia right here? The Australian dollar. Positive news on the Australian, but what about the Chinese announcement here? The Australian dollar had some positive announcements, but none of them were high level, mid level, and low level announcement. None of them were three bullheads. What happened on China's three bullhead announcement? Worse than expected or better? Worse. Yeah. Why do I point out the Chinese announcement being negative, and what might that have to do with Australia? What might that have to do with the Australian dollar? Who's the number one buyer of Australian exports? China. Yes, China. Okay. And so a lot of times, as China goes, so goes the Australian dollar. Now, today, what I want to pair, if I think the Australian dollar will weaken because of really bad news out of China, 3 bullet announcement, worse than expected, and obviously they've got this virus problem going on in China, right? Which isn't good news when commerce is being restricted, travel's being restricted. There's even reports of people not being able to go to factories because everyone's on lockdown in different areas of China. That's not necessarily good for the Australian dollar to see all these problems occurring in China. So I can kind of look past these low-level and mid-level announcements out of Australia and look at the large announcement out of China and also what's been going on with this coronavirus. So I feel a lot of pressure when I see bad news out of China. I feel pressure on the Australian now because the fear factor is actually dropping. The yen, Anuchka, I'm sorry if I'm butchering your name. You would say sell the Australian against the yen, but look what's happening with fear today. The yen is a safe haven currency, but if fear is dropping and gold is dropping, shouldn't the yen be weakening today? You typically want to pair a strong horse against a weak horse. Okay? If the Australian dollar is the weak horse, who's had good news today? Look at the futures, S&P 500, NASDAQ, Dow. Look at the dollar index. Is the US dollar strengthening or weakening? US dollar index up almost 0.5%. So rather than pairing the weak Australian against a weak yen on a day where fear is dropping, so the yen as a safe haven currency you'd think might be weakening, what currency has reason to strengthen today? NASDAQ, Dow Jones, S&P 500, all in the green. USD. And you don't have to guess whether the USD was strengthening. From this morning, you could have gotten in on these trades this morning. From this morning, the US dollar index was in green. You could see this. I could see this when I first came into work early morning. I could see this occurring and easily could have rode the Australian dollar versus the USD through the day. Okay, so let's take a look at what happened and what you still could do moving forward. Okay, we'll take a look at both and see what's going on. And so just a quick snapshot of what we might expect to see on the charts. Now, if we go into today, who had good news today? Look at this German manufacturing out of the European Union in the green. Manufacturing PMI in the green. Manufacturing out of Great Britain. They expected contraction below 50. If you're at 50 or above, that shows industry expansion. So a little bit higher than expected for the pound. So overall, there were some negative reports for the euro here, but then 3 or 4 or 5 positive reports on the euro and the pound. Okay, and you look down here, USD, 3 bullhead announcement, positive. Okay, over 50% on the PMI numbers, the Manufacturing Purchasing Manager Index. The prices were higher than expected, showing industry expansion when the expectation was industry contraction below 50. So the euro, the pound, the USD, all have reasons to strengthen. What would you pair those against? The Australian dollar, or if there's weakening safe havens today, potentially? Yeah, correct. Maybe against the yen, right? You expect maybe the yen to be weakening as the safe havens maybe are pulling back with less volatility, less fear today. Okay, so let's have a look at the charts. Let's see how much of this would come to fruition, what everything looked like. So, and just to show you this positive momentum and dropping fear wasn't just on the US markets. Okay, here's the FTSE. What did the FTSE do? What do we call this when from Friday's close to Sunday night's open / Monday morning's open, when there's a space in the price, what do we call that? A gap. And it gapped up, right? Sometimes you can trade for it to fill the gap. Once it gaps up, you'll see it go into a downtrend, okay? If this would have went into a downtrend below the opening price, okay? This is a technical analysis strategy. You draw the line at the opening price. You wait for the momentum to slow, and you see when it comes down, if it breaks back into the gap below the opening price, many traders will then trade to fill the gap, and you'll see it many times return to the price that it closed at on Friday before it runs back up further or breaks and drops. Okay? But if it never re-enters the gap and it goes to a new high, okay? It dropped, it went to a new high right here. Okay? This new high up here, as it broke this high point here, this was the opening, it rushed up and dropped. As it broke past that high, either here or here, what kind of pending order would have got you in above this resistance level to buy once it went above? You ride the wave with the momentum. If it doesn't re-enter the gap, if it goes into an uptrend, a buy stop. Yeah, exactly. A buy stop. And if you're patient with your stop loss, meaning a logical place to put your stop loss, if you were buying once it broke through, say here was the breakthrough, or here, depending how close you had it. Okay, you could have gotten in around 72.53 or 72, maybe 60, 63. Okay, somewhere in this range you would have gotten in as it broke above the opening surge, confirming an uptrend with the upward gap, and also confirming it didn't break into the gap to go back down. Uptrend occurs, you go with the gap direction. This is a technical analysis strategy, going with the momentum at the open once it confirms an uptrend after that gap. Okay, you also can trade to fill the gap if it breaks back into it. Okay, you can do both. In this case, it never went back into the gap. It stayed above it and it went to a new high after it formed resistance here. Resistance, here's the new high. This would have been my entry, and here it went up. Your stop loss would never have been hit if you put your stop loss into the gap, okay? Because it never broke back into the gap and it went to an uptrend. A logical spot to put your stop loss would be below the opening price into the gap. And as long as it doesn't break below that opening gap price, then it's still uptrending on the day. Okay? So when would you take your profit? I can logically look off to the side and say the first resistance level I saw is here. Okay? And so your first spot where you might have taken profit is as it reached this resistance level here, which was up around 72.75. That would have been a good $15 up on the price, 150 point climb. Okay, that could easily have been a 150 point climb, getting in late here and getting out at the first resistance level here. Okay, that still would have been a 150 point climb. Okay, point being the first decimal, so 15 full dollars in the indice, or 150 points. And so, if you had 10 indice position, that's a nice profit. Or 100 indice position, it's even nicer, right? No, it's not only working for indices. Good question. You see this type of thing occur a lot of times with lots of assets. Obviously, not every time. I'm not saying it's going to work every time. The idea is it works many times, enough that if you play it properly, you can profit in the long term. And if you're looking at this, number one, if it gapped up, there's upward momentum. So you're already looking, okay, momentum's up. Then it doesn't break into the gap and it goes to a higher high point and breaks through. Now you get in with upward momentum, upward gap, and a broken resistance that formed here. And you see how high it went. Many times what you can do, once it gets towards this resistance, you could have put a trailing stop on, and then as it ran up, you're with it, and once it kicked back, it closes. Okay? And for anyone who doesn't know how to do a trailing stop, I'll just show you real quick. Let's say I was in on this, I bought on the FTSE, Okay, let's pretend I'm in profit and I say I want to close or I want to put a trailing stop. Let's say the movement was up here and got to my resistance level, and I say, okay, I think it could keep going. I don't want to close it, but I want to preserve the profit I've made. Then what I can do is add a trailing stop. You right click over the asset, you see trailing stop. You can put it the number of points back that you want. Okay, and the higher it goes, that trailing stop moves with it. And if at any point from the high water mark, it goes back that distance, it'll close it and preserve the rest of the profit. Okay, so that's one option to preserve profit, as it would have reached that first resistance level right about here, which would have been a logical spot to close. Another option is you can do a partial close. If it's reaching the resistance and you say, listen, I think it might break through, but I don't want to risk that it bounces all the way back down and I lose my profit. So what you can do is go to modify or delete, switch to market execution, and you see I have the option to sell or buy with a new position, but I also can close part of my current position. So if I have a quarter of a lot open, I can close 0. Let's say 1.5. Say, okay, I'm going to close this much of my trade. What you're going to see is my open position then change. It closed 0.15, and now I only have 0.10 open. So now I've preserved more than half of the profit that it would have been in, and I'm giving myself a chance for the momentum to continue, and then I would have been in on that, the rest of that movement. Okay, so a couple different options for risk managing. Once you see the profit you like, once you reach maybe that first resistance level on this example, you can either add a trailing stop or do a partial close, and or both. Okay, it's a good spot to pause, I think. Any questions so far? Any comments? Okay, and I'll keep my eye out for questions. Maybe some of you are taking a little longer to type. What do we call this movement here when, if you'd have had a pending order at this resistance point, let's say you took your profit on the way up here at the first resistance point, and then you put a pending order here. When it broke through the resistance, it buys. You wait for confirmation of the breakthrough. So in this example, you closed the whole position at the resistance mark, and if it broke through, you re-entered as a buy. What pending order buys from a higher point? So that if you took your profit here on the first one, it breaks through and hits your pending order and buys again, it's a buy stop. Exactly, it's a buy stop. And either you would have taken a quick profit, or you'd have had it come back down and break below the support and maybe gotten out of it with a small loss. So the first one would have been a nice profit. The breakthrough, if you put a trailing stop on it, would have been a profit. If it kicked back, it would have closed. Or if you didn't risk manage it like that, you could have lost that profit on the way back down. Okay, again, you're not going to be perfect, right? But the idea here is to go with the momentum many times, go with the trend on the chart, and you'll see many times it pays off nicely. Okay, now I would say that this resistance point was predictable as well. Let's go to something more like 30-minute candles. This resistance level, look over here. This was an old support. Look, support, support. Here's your breakthrough candle, larger than the other candles. That's what it took to break this support right here. So even the second resistance level was predictable. You could have taken the profit at the first resistance level and gotten out. On the breakthrough buy stop, this spot before it dropped, look over here to the left on the 30-minute candles, predictable. It was an old support, 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 breakthrough candle larger than the rest, and down it went. Okay, so I would contend to you that the first resistance level was predictable. The second resistance level was also predictable. Resistance here and resistance here, which is the old support level. So what we were seeing on 15-minute candles, you might not have seen, but when you go to 30-minute, you can see this old support, which makes it precisely the spot where that momentum died off. Okay. Anuka, I'm trying to understand your question. Okay. So the take profit and the stop loss marks, many times you have to look at the larger candles. I call it taking an inside out look. The inside look gives you exact entry point, recognizing where you want to get in on the 5-minute candles, the 15-minute candles. But sometimes to know where you want to get out, okay, go to the 30-minute, the 1 hour, the 4 hour. And then you start to see these old support levels and breakthrough levels. And then it was completely predictable that that's the spot where you might want to take profit as it gets near this old support level, which now, according to support and resistance theory, should be resistance. And to a T, it stopped at that spot. So there's no reason why on this movement, after the gap up, why you couldn't have profited once and twice. Completely predictable technical analysis wise, and it went with the fundamental news, went with the gap and the momentum. Everything was there, painted out for you in the music notes, as sometimes I like to call them, on the charts. You could see what was happening with that tempo. You could see what direction that rhythm was going. Okay, to carry the analogy maybe a little too far. Okay, so sure, we can look at the 4 hour. What do we see on the 4 hour? A much larger downtrend, right? Look at that. So in the bigger picture, this is a huge downtrend, isn't it? It really is a huge downtrend in the bigger picture. But looking at the smaller candles and today's news, it was very predictable what was going to happen today. Okay, in the smaller picture. And many times it's easier to predict the shorter movements than the longer movements because the news can change so fast. And you can catch the momentum and ride the wave with the confirmations, with the breakthrough movements until it dies down. Okay, let's take a look then at maybe some others. NASDAQ. What a simple move, and the momentum was there all day. So what a simple move, and I have a lot of traders who did this today. Resistance, resistance, climbing against the resistance. This was just a few hours back, right? What kind of pending order? Again, I know it's repetitive and I know it's the same concept, but this is how easy it can be. What kind of pending order would have gotten us in when this resistance level was broken? A buy stop. And you know, many times people will look at this candle right here, okay, this movement that occurred before the resistance and say, but I missed the movement. Look at that climb. They say, I missed it. It takes that kind of momentum, those breakthrough candles many times. You can identify a breakthrough candle from a normal candle. Look how much bigger it is compared to the others. This is a sign of momentum. When the resistance is broken, that's confirmation of a continuation of that momentum. And look at it climb, even if you got in late, okay? After it broke the resistance, it climbed from 90, 98, all the way up to 91.50 before it died down. That's a $150 climb per indice, 1,500 point climb in what, 45 minutes? And that's after this big rise, getting in after the breakthrough, after the confirmation, and it still went up 150 on the NASDAQ. That's huge, huge profit potential and not having to guess the market. This is using technical analysis and your knowledge of what's happening fundamentally. Remember, it took us about 1 minute to look at investing.com at all the green, and the only thing in red was the volatility index was dropping. Took us literally 1 minute to understand its positive momentum on the market. So preparing buy stops here made complete sense. And earlier today, that volatility index was down even more than it is now. Okay, it was even easier to see. 7.5, almost 8%. I saw it dropped. Okay, so very predictable. What kind of pending order, if you think that this positive momentum will continue, what kind of pending order would buy from this support level now? A move you still could do if you believe in the positive momentum. Now, you don't have to believe in it, but if you did, yeah, buy limit. The buy limit buys from a lower point. Real quick to set, real easy to set up. Switch from market execution to pending, and you pick the type of pending order here. Okay, pending for the type. And in this case, a buy limit. You program the price that you'd want to buy from, and if it hits that price, it buys. Okay, what could you back this up with in case you're wrong, or in case the news changes? An article could come out that's horrible for the market after your buy limit opens and you're buying up off that support level. What kind of order could we put below the support level to protect ourselves in case the news changes and it breaks the support level? Maybe your stop loss is down here on the buy limit in case it breaks the support. What could you have down here? A sell stop, exactly. A sell stop. You could have a sell stop right down here. And just as quick as you said, I know there's positive momentum, you could recognize that if this support level breaks by enough in your eyes to be significant, put the entry point down far enough that you don't get hit by a little false signal. But if it breaks the support by enough that you deem significant, then you have to be willing to say, the news must have changed. The support level broke. The momentum must be down now. Okay? Whatever positive news broke it through to get above. Look at the momentum it took to get above. It would take a lot of momentum to come back down. And if it breaks that support and comes rushing down, there's no reason why you can't get out of your buy and get in on a sell. It's the difference between trying to guess the market and reading the market. Okay, that's what technical analysis should be about, not guessing the market, but reading the market. Use the fundamental news as you know it to pick a direction that you think you'll be right more than you'll be wrong, but also be willing to say the news can change, and I'll prepare in case some type of unexpected fundamental news breaks. You've got yourself backed up either to hedge it or to get out of the original trade and go in the opposite direction. Both are options. Anuka, yeah, you could hedge yourself with gold as well. You could have a pending order on gold, right, to buy at a certain price in case this drops and breaks the support. One of them should win, right? If the NASDAQ comes crashing down, probably gold will go running up. No guarantee, but that would set up a nice hedge in and of itself, those two positions in opposite directions. But at some point, you'd probably need to pick a direction to end up profiting on the trade set. Okay. But this looks like a nice little setup. Now, each trader's different. Some might say, I'll buy now. I'll buy now because it's not very far to risk to get your stop loss down here. Some might buy now and not put a buy limit so close to the support. And that's okay. If you believe in the momentum, you could buy now and put your stop loss down here and say, okay, that's an acceptable risk to me. And if let's say you say, well, I'd rather get in here because then I don't have to risk it as much to put my stop loss below the support. What can you do to make it so you're risking the same amount and get in even up here? Even if you have to put your stop loss twice the distance to get below the support, what do you do with the trade size so you're not risking more? Yeah, exactly. Lower the trade size. So if you don't want to miss a potential movement that might go up at any time, if that's how you feel, it could go now. If you try and be too perfect, you might miss the movement. So if you trust the positive momentum of the day, if you trust the support level, then okay, if you don't want to risk so much to buy from the current position, then just take a smaller trade size if you want to get that stop loss below the support from a higher position. So you're sacrificing some of the profit potential to eliminate the potential of missing the movement. All right. Okay, just some ideas here. The momentum says up, and the first resistance level then is up here. right? If you took a buy, and if you're scalping, meaning getting in and out in short movements, then your first take profit mark would be just before 91.50. Here's the resistance level right here. Resistance, resistance, down. So if you're taking a shot, you've got a good $40 climb to the first resistance level, which is quite a nice trade if it did that for you, okay? And you don't have to risk only but maybe half that much to get below the support. All right? Tremendous. And we see it's trying to bounce right now as we're watching it. So before we look, what do we think happened with gold today if the markets rose? I don't need to look at the chart to know. Yeah, probably went down, okay? And there it is. So 15-minute candles, we see downward movement. Okay. Every time it reached today, this resistance point, you could have been trading down. Okay. So the market opened right here on this support level. This was an old support. The market opened and immediately broke the support. Immediately. This was the support from Friday right here. The market opened and down it went. And then it became resistance, resistance. If you'd have looked and saw the futures were green, which they were, as soon as the market opened, futures were green on NASDAQ, Dow Jones, S&P, etc. Volatility index was dropping. You could easily have predicted this resistance level would hold. So resistance, here's the first shot you had to trade down. Look at the profit. It dropped from 1580 all the way down to 1573 or so. Okay. Then it came back up near the resistance. Here's your second shot to trade down. Stop loss just above the resistance, going with the momentum of the day, with the direction of the gaps, which were positive momentum on the indices. The volatility index was down 7-8% early this morning. You could have traded down from the resistance the second time, profit. It came up to the resistance a third time. Trade down from the resistance, going with the fundamental news and put your stop loss above the resistance. You profited a fourth time. Here it came up near the resistance again. You trade down, profit a fifth time. You see the picture, right? So look at the power of combining the fundamental news, the quick snapshot that if you got up early in the morning, even if you had to go to work, you take a look, you say, wow, everything's green. The fear index was down 7.5% through the day. You take a peek at that and you say, wow, let me look at the movement on gold. And you say, wow, as the market opened, it broke the support from Friday and it became resistance. So even if you caught it here or here or here, you had lots of opportunities to profit. The title, let me show you. Good question. Someone's asking about the correlation between the fear index, the volatility index, and U.S. indices. You see who puts this out, right? S&P 500. So it's most closely correlated with the S&P 500. But you understand that's 500 companies, okay? That's 500 companies in the S&P 500, and many of those are also in the NASDAQ or the Dow, okay? So and there's a strong correlation between all the major U.S. indices. So the S&P Fear Index Volatility Index has a strong negative correlation with all the U.S. indices, and I would say even with some of the other indices around the world. As we looked at the FTSE, we saw the upward momentum in opposite direction movement of the volatility index as well. DeBogo, I'm sorry if you're having some issues with your lines. I believe it's on your side. Andres, resistance is a spot where the price goes up, hits, and drops. Goes up, hits, and drops repetitively. Hanny, yes, Fibonacci levels. Many times, if you pair up your Fibonacci levels with the resistance level, it gives you double confirmation of where you might trust the resistance to drop from. And I would be willing to bet if we threw Fibonacci indicator on, you'd see the Fibonacci levels matched up with this old resistance, which became support on Friday, and then which broke and became resistance again today. Okay, it flips just like that. Broken support becomes resistance, broken resistance becomes support. Resistance, 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 breakthrough candle becomes support, 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 then breakthrough candle becomes resistance, resistance, resistance. Okay? And some of you asked, does this happen a lot? Yes, it does happen a lot, that the fundamental news can help you predict a preferred direction maybe for trading with your technical analysis. It happens very often. Okay, maybe not always this perfect. Today was great. You really might have won, I don't know, 10 out of 12 trades following this today, maybe even better, because all the assets followed the momentum, all the signs were there. It was very easy to read, and with the proper technical entry points, you see the power of technical analysis as well. You see the entry points. Once it broke, entry, drop, resistance, drop, resistance, drop. It's getting near the resistance. You don't have to wait till it touches it. It doesn't always touch it. So you want to get in somewhere near the resistance, not necessarily waiting for it to touch. Okay. Once it gets near and starts to downtrend, that's maybe your confirmation of a reversal. Dighton, good question. You're asking which time frames do I prefer for drawing my lines? And I would say, again, I like to look at an outside in or an inside out look. I'll look at the 5 minute, the 15 minute, the 1 hour, the 4 hour, even 1 day sometimes, and then zoom back in to draw my lines. Okay. I want to draw my lines with as much information as possible. I want to be able to see that this resistance level matched the resistance level from last week right here, and that it matched the support level back here. If I was only on 1 minute candles, I wouldn't see this predictable resistance level for getting out of or getting into my trades here in this area. So if you're zoomed in too close, 1 minute candles, you don't see enough information necessarily to know where to draw a significant resistance level or support level. So you got to back out and see 5 minute, 15 minute, get enough information to be confident on where those price levels are. Good question. Okay, so gold is looking like it easily could fall some more today with the momentum that we see. Okay, the question is, where would you prefer to enter? You could enter if you get near the resistance again, and you could prepare buy stops in case it breaks through. The other idea is you might be afraid that it won't go back up to the resistance. If that's the case, you take a market sell, take a smaller trade so that you can still put your stop loss above the resistance, but it won't cost you more by taking it a further distance from the resistance if you take a smaller trade, right? Sacrifice some profit potential in case it continues down. If you wanted to take a market sell now, but you don't want to risk so much, then you take a smaller trade and you can still put your stop loss above the resistance. Okay, these are things you can do. No one right entry point is right and the other is wrong. Okay, if you feel the momentum is still down and you're willing to take a smaller trade so that you can get in a further distance from the resistance, then you can go ahead and do that. It's no problem. Each trader has their preference. If you're more patient, you say, okay, I'm okay missing it if it drops. I prefer to get in at just below the resistance. Then you wait. You put a sell limit and you wait for it to come up and get closer, and then the sell limit sells from the spot you determine. Okay, so either strategy is okay. Okay, let's move forward. I'm not sure I understand your question, Anuchka. Maybe retype. Maybe you misspelled. I don't know what GAB is. Maybe you mean gap. Okay, so let's take a look maybe at the Australian. We talked about the Australian coming in. Australian USD. Okay, wasn't this predictable today? Wasn't this predictable? Resistance, support. Look at that ranging. Look how many times you could have profited Friday and then again today. This was Friday. The bad news about the coronavirus, down went the Australian. It tried to recover resistance on Friday. Okay, resistance again as the market opened today. This was your first spot to sell today on the Australian. Okay, why again? Why would you know to sell on the Australian against the USD right here from this resistance? Why would you trust this resistance today on the Australian USD? We covered it at the outset when we started. Why would you have trusted this resistance level to trade down here today on the Australian USD? To trade down here today on the Australian USD? At the resistance, down, profit. At the resistance, down, profit. Again, at the resistance here, profit. Again, at the resistance here, profit. Why was that predictable? Bad China news. And I'm not just talking about coronavirus. It's that announcement we looked at that came in overnight. Okay, let's go back to yesterday, early morning / late night. Anytime you see 3 bullheads, that means high volatility, high impact expected on the currency, and red, worse than expected on a high level announcement, it typically means bearish pressure on the Australian. Right away, you can think that. That was right as the market was opening this time. Okay, so then we go to today and we look at the chart and we say, wow, how many opportunities did I have the ability to make money off Friday's resistance right here? 1, 2, 3, 4 times. And how many pips did it drop? 67, let's say you got in 67.04, just below the resistance down here. It dropped to 66.84, 4 times. Let's say not 18 pips, let's say 15 pips, that you weren't perfect on the entry or the exit, but somewhere near the resistance and somewhere near this support, you got out. 15 pips times 4, that's 60 pips. Just simply going with the resistance level, going in the direction of the fundamental news. 60 pip profit. If you can average 20 pip profit a day, you're doing well with most trading strategies, long-term profiters. You had the ability 1, 2, 3, 4 times. Now, why am I not saying anything about trading up off the support? Because you know what? You'd have profited once, twice, and trying to be a third time coming up off the support as well. Why am I not talking about trading up off the support today on that? Because it was bad news out of China, right? The wind was south. So I'm not looking and trying to say, wow, I could have profited more by trading up. I'm going with my strategy. Strategy being trying to put everything in my favor as much as possible, understanding that I'll miss some opportunities by only trading maybe in that one direction. And I'm okay with that as long as I'm winning, right? Because what's more likely to have happened today? This resistance breaking and your sell being wrong, or this support breaking and a buy position being wrong? I think we understand it was more likely that it would break the support with the bad news out of China. So we avoid trading up off the support if we think there's bearish pressure on the Australian, because eventually you're thinking it's more likely for the support to break than the resistance. Okay, you get the idea of selectively picking which technical analysis entry points you trust more. As it turned out, you'd have won just as much trading up off the support as you did trading down off the resistance, and that's just fine. In the end, had you carried out this strategy, you won with all those sell positions, and you called a nice day. Okay, you're not going to catch all the movements. You want to catch enough to profit and avoid as many false signals as possible, as many false breakthroughs as possible. Okay, any questions? Okay, let's look at a couple or maybe just one other asset. And so Maybe we look at USD JPY. Was that not predictable? Okay, we're looking at the open. Which direction did it gap at open? Here's Friday's close, USD JPY. Here is Sunday night / Monday morning's open. It gapped up, okay? Now this one, take a look at this. This one went back into the gap. It didn't go to a higher high right away. It went back into the gap right here. So you could have traded to fill the gap. That would have profited. Then once it broke back to a higher high, right here, let's follow the strategy. Higher high point than the open. Okay, here's the resistance. It breaks up, you buy. And what happened through the day? Uptrend. Okay, so this is an example where if you were patient enough when it dipped back down, or if you got out at the first resistance level, let's go 30-minute candles. Okay, so you had an opportunity to get out with a profit here. Okay, second opportunity here. And I would say the first resistance level I see was this one right here. This, whoops, I drew a vertical line instead of horizontal. Let me get to the proper line. Right here, I see being the first resistance level. This was the breakthrough candle here. You see the big candle. This was the breakthrough. So this was a natural spot as you come across to take profit on the first climb. And again, if you had put a trailing stop, once it got through this first resistance and climbed to the next breakthrough candle location, then you would have avoided this big drop. But had you been patient, you still could have profited as it went up even further. I would say realistically, this is where most traders could have gotten out as it started to downtrend again and take your profit. Would have been a nice little move. And we could look at, remember we had positive announcements on the pound. GBP, JPY went up. It did consolidate and go sideways and then drop. The pound would have been a failure. Let's look at euro, and the euro would have been good. Okay, so the currencies were a bit less predictable, which I find that to be the case many times, because there's so many announcements coming on individual currencies. You got upward movement, downward movement, and with the GBP, you've got the Brexit news coming out. Okay, so many times you'll see that the indices move with the more global picture that's more predictable, and the individual currencies, unless they're tied to global movements like the Australian dollar, they tend to be somewhat less predictable and have more up and down rapid volatile movements. Okay, which is good, those of you who trade currencies. And maybe next time we'll focus more on currencies and take a look at that beyond just the Australian dollar that we looked at in the yen. But we did see a lot of climbing today. Here, these are 30-minute candles. Let's go to 15. We see a lot of climbing opportunities that occurred with the euro against the yen, as it this was after the announcements here, and it went way up. Okay, and when we go back to that GBP movement, let's go back to it. We can see it's the one that failed us, right? It plunged even with somewhat good news. But simple technical analysis, support. So let's say you were trading up on the pound. This is a good example of if the fundamental news fails you, pound is going up. Let's say you bought off this support. Here's the breakthrough of the support. What do you have as a backup? Because didn't we say you don't try and guess the market, you play the market. You read the market. If it broke the support, your stop loss was below the support, and now you get in with what kind of pending order for an easy profit? A sell stop, right? So this is a good example of where what 6 out of 8 of our assets were predictable and made very nice profits. Maybe 18 out of 20 signals were profitable. And here's one that went dead wrong, maybe. GBP, JPY. The yen should have been weakening. The pound had a good announcement, and it went the other way. Some kind of unexpected fundamental news hit. You have your stop loss below the support. You have your sell stop ready to go. And look at the profit you'd have had even when you were dead wrong. You lose a little as you get in off the support, it breaks, and you profit on the sell stop 10 times the size of what you lost as that support broke on the buy. I think that's a good example to leave on, to show you that it's many times the profit doesn't come with your first move. It doesn't come with what you thought was right. Many times it comes with a smart move, meaning you backed yourself up just in case you were wrong. And on this one, look at how that would have paid. I mean, it dropped 142.55 after it broke the support down to 141.14 right now. We're talking 140 pips. Wow, some big news broke, right? Unexpected news. And you don't have to know what the news will be. You prepared for it with the sell stop, and the buy stop in this example was wrong, or the buy off the support, market buy maybe, or a buy limit off the support ended up being wrong. Unless you took the profit up here, you had several chances to take the profit, right? You had one opportunity today to take the profit off the support, then it came down and broke. And if you hadn't taken the profit, stop loss down here, major profit on the sell stop. Okay, any last questions before we end here? I think we saw about 4 or 5 assets that the technicals and the fundamental went the way you expected. One asset that didn't, and we saw we could have profited on all of them today. All right, everybody, you're welcome. What I want to see now, I want to see these strategies carried out. If anyone's coming to tomorrow's webinar, or the next one earlier in the day, or next Monday's webinar, I want you to all show up and tell me you tried it, you carried it out with the entry points you thought were right, using the strategy that made sense to you, like some of the things we went over, and I want to hear that you all profited well. Hopefully, right? Remember, no guarantees, but it's about proper entry points, proper risk management, and let's see some accounts grow, hopefully, all right? Yeah, everything is recorded. You'll catch them by the next day, by tomorrow. This webinar will be on our YouTube channel. And there's a section for English webinars. You can find them. Okay? You can watch all the recordings for all my past webinars for the past weeks and months on our YouTube channel. Just go to YouTube and keyword search AvaTrade channel, and you'll find it. Okay? All right, great, everybody. Thanks for joining. Good luck with your trading. I think there's a lot of opportunities still today. Bye for now.